Hi, welcome back to StarPropertyTV. Today we have Shan Saeed, a chief economist at IQI Group Holdings, a leading property and investment company operating and advising clients in Kuala Lumpur, Singapore, Hong Kong, London, Melbourne, and Dubai. Welcome, Shan.
Thanks.
Right, so we are going to put you on the hot seat and ask you questions very pertinent to Malaysians. To start with, do you say Malaysia property market is in a bubble?
I don't think that Malaysian property market is in a bubble. What is a bubble? You have to understand that when land prices are crashing, that is a sign of a bubble. So right now, not a single area, whether we are talking about KL or Penang or in Johor Bahru, where land prices are crashing. In fact, the land prices are on the upsurge. And there are few areas where land prices are moving up slowly, but there are few areas, let's say in KL, like Old Klang Road, Bangsar South, Puchong, KLCC area, where land prices are moving up quite steadily. So I don't think that the property market is in bubble right now in KL.
What about the direction of the property market by and large for 2017?
I think the property market will move up in a very structured manner. It will not rise as fast as it used to be in 2013 or 2014, but still the property market will remain on the upsurge, and there are good buying opportunities for sophisticated investors in Malaysia.
And what caused that rapid movement or upward movement within like 2013, 2014?
I think there are 2-3 factors. One is infrastructure investment. And if you see, infrastructure investment has strong correlation with GDP growth, demographics, the geography of Malaysia. So if you see right now, most of the global investors, they are looking at Malaysia from a very strategic angle. Because of Strait of Malacca, Malaysia is getting a lot of investment because of a location. So I think Malaysia will remain on the global investors radar because of a location. The demographics are rising, and plus the modern infrastructure, it really attracts the foreign investors to come in this part of the world.
And what about the direction of the ringgit? We've seen it sliding down against the dollar for some time, but is this the end of it, or?
I think ringgit will rebound. Ringgit will stay. The fair value of ringgit is between 410 and 430. I see the bases are very simple. I see oil prices to remain on the upsurge. The US dollar might take a pullback. So once US dollar it takes a pullback, other currencies will go up. So I think the fair value of ringgit should remain between 410 and 430 this year.
And what about oil prices? Where do you see it going?
Last year, I was in Dubai, so I made a statement that oil prices will be moving between $70 and $100 per barrel by Q3 2017. Again, the premise is very simple. The geopolitical risk is getting higher, and plus the demand for oil is touching 95 million barrels per day, and by end of this year it will be touching 96 million barrels per day. Plus there will be some supply constraint. Alberta Oil Sands, they have the companies over there, they have filed for bankruptcies. It's like a goose town over there. And in many companies in US, yes, there are some shale gas companies which are making a turnaround, but there are many companies in US who have actually filed for bankruptcy. So I think a supply constraint, upsurge in demand, and geopolitical risk are some of the factors that will keep oil prices on the rise.
All right, and Q1 for 2017 is done. What do you see for the remainder of 2017 for Malaysia and the region as well?
I think Asean will remain on the global investors radar, and at IQI I've already said that Malaysia's GDP for the next 5 years will be between 4.3 and 4.7. So overall, if I were to look at ASEAN, Malaysia is one of the leading economies of ASEAN. Not only that, IQI has made KL as its command center for properties in Vietnam, Philippines, Indonesia, and Thailand. And we continue to have strong confidence in the government, and we continue to believe that economic confidence is the key for the Malaysia's growth story.
And the property market, has been slow. 2017 is expected to remain flat. Should the government step in and try to drive up, transactions, or they should just let the market correct itself?
I think I believe in free markets. Let the market forces decide what is the price of real estate. So government should not intervene. I always believe that, once the government intervenes, it sends negative signal to the market. So the government should not intervene. Let the market forces decide. And I still believe there are some good opportunities in Malaysian real estate market. It is still very attractive. It's still freehold. It is still very cheap as compared to Singapore, as compared to Hong Kong. So I have said previously that Malaysian properties will become like Hong Kong in the next 5 years. So the prices are still very attractive, and they're still very much reachable to smart investors.
But you see, the thing is, property buying by and large, has a direct correlation with our income, our disposable income, and market sentiment. I mean, you as an economist says that it's a good time to buy. There are good opportunities, but the man on the street don't think so. The sentiment is poor. They are afraid to commit. I don't know whether it's because election is looming. I don't know whether how much that influenced their sentiment.
I think I disagree with you. In 2008, Malaysia's GDP was $248 billion. As of now, when we speak, Malaysia's GDP is $325 billion. So if you see, in the last 9 years, the income levels have gone up. People are making money. And what is GDP? To a layman, GDP is your income level. I know a person who was driving Toyota Vios when I moved from Chicago to KL. Now the same gentleman is driving Mercedes 400. It means his living standard has moved up. That's why he can afford Mercedes 400. So I think the living standards are going up. The income levels are going up. For some people, yes.
But the
income levels are not going up.
The central bank is still, not approving at least like 50% for home loans. I believe their argument is they're actually protecting the buyers. Before you commit a 35-year loan for a mortgage. So if they're doing fairly well, why isn't the banks approving their?
I think it's a matter of perspective. Banks are still lending money. They want to lend money. That's how they will make money.
Yep.
But if you say the banks are not lending money, I think that's a statement that's quite out of context. So banks are still lending money. But if I used to work for Standard Chartered banks. If I were a bank, I would protect myself. I would only lend my money to a client whose credibility is there, whose financials are straightforward. So for me, financials are important, plus the credibility of the client is very important. And if I get those two variables right, I will still lend money.
Should Malaysians be worried about 89 to 90%
the household debt?
Yeah, household debts against the GDP. Should we be concerned about that?
I think that's part of the concern. But the household debt to GDP level can go down if the income levels are rising. So income levels are still rising. They are not going down. People are still making money. The GDP is still on the upside. So the household debt, it's everywhere. If you go to Europe, the household debt to GDP ratio is around 95%. In US is 106%. So I think nothing to worry about. When the economies are growing, you need to have the income levels are rising, the household debt is rising as well. So it's part of the growing economy. So nothing to be afraid of.
And you say, you foresee Malaysian property market prices, the prices are going to reach levels of what we see in Hong Kong. Why are you so bullish?
Because of Malaysia's geography. Malaysia's geography is still very much relevant to global investors. You'll be surprised to know that 40% of the global oil supplies are moving through Strait of Hormuz, which is close to Iran, and the other one is Strait of Malacca. And 80% of China's trade is moving from west to east through Strait of Malacca. So Strait of Malacca and Malaysia's geography in terms of military, in terms of naval and of its location, I think that makes Malaysia very, very attractive for global investors. And that's why most of the Japanese and the Koreans, they're coming over here and they're buying properties in big numbers. Not only the local, but also foreigners as well. So Malaysia's geography is very attractive for global investors.
We have quite tight regulations for foreign investors. I believe they have to invest in quite a pricey home if they want to get a home here. And is it right that our government controls this? Will the influx of foreign investors hurt Malaysians or do well for us?
Not at all. I think that's the beauty of Malaysia's real estate market. It's a very mature market. The regulations are very much in place, so that there's no point of speculation. You know, there's no point of flipping your property. I buy today and I flip it tomorrow. It's not like that. So it's a very mature market. The investors are very mature, and the regulation, the rules are very much in place. That makes the property market very ideal for sophisticated investors to look at this region. So I don't think the regulations are bad, because it's a very mature and a very stable market, I would say.
So let's talk about China. What about the One Belt, One Road initiative? What is the implications for Malaysia?
I think Malaysia is part of that One Belt, One Road equation, and that's why the Malaysian geography is very significant for China. That's why two countries are very important for OBOR. One is Pakistan, and the other one is Malaysia. And these two countries will be getting massive investment from China because of their location. So I think if I were to tell you, you say, I don't like the location of Malaysia, let's move it to Liechtenstein or next to Luxembourg. You cannot change the geography. The geography will remain there. So I think in terms of One Belt, One Road, Malaysia carries a lot of significance for Chinese investors. So that's why Malaysia will continue to remain on global investors' radar because of OBOR.
And we read a report recently, about China, the government controlling capital outflow. Will it hurt Malaysia because of all the investment, especially in Iskandar?
Because every country has to protect her self-interest. What Chinese government is doing is perfectly in line what the Chinese leadership has decided. So I think if they put capital controls, nothing to worry about. There are so many countries that have put capital controls previously, but nobody talks about it. But once China, she does something, everybody start, make hue and cry. So I think what Chinese government is doing is perfectly in line with market forces.
And I know, there's a lot of FDI from China and Malaysia. The government has given a lot of mega projects, infrastructural projects to China. A lot of Malaysians have voiced out their concern of reselling our sovereignty to the Chinese government. What is your take on this?
I think the Prime Minister has done a remarkable job. He has shown his diplomatic and economic brinkmanship. If you see in the last 6 months, Malaysia has got 144 billion ringgit from China, and it has got 31 billion ringgit from Saudi. And these are the two major players in terms of investment. So I think Malaysia has got investment from these countries, and I don't think that the government is selling the sovereignty. I think that's too much to say like that.
All right, and the global economy has a gloomy picture, especially looking at Europe. And I just want to ask you, off the cuff, what is the implication from Trumponomics?
Trumponomics will continue to have uncertainty. When you have policy uncertainty, that keeps the investors on the edge. The investors, they don't like uncertainty. The markets, they don't like dictation from the government. Donald Trump is trying to dictate things, when the markets are feeling the pressure now. If you see last week, the market just, took a slight tank, that is a clear indication that policy uncertainty will hurt the US economy, and it might go into recession, or it might lead to a subpar growth. So I think policy uncertainty will be a huge drag for the US economy.
And what about Europe?
Europe is dead. I mean, Europe is moving like a headless chicken. So I have zero confidence in European economy, and I have zero confidence in Europe.
So the future is all in ASEAN?
The future is all in ASEAN. If you are in ASEAN, you're in the right place. If you're in Asia, you're in the right place. In the 19th century, I learned from Jim Rogers, everybody was heading to New York.
Yeah.
In the 20th century, everybody was, in the 19th century, everybody was heading to London. In the 20th century, everybody was heading to New York. In the 21st century, people should be heading to Asia. That's why you see so many Europeans.
Yeah.
They're coming to this part of the world because they can't find jobs.
Yeah, I believe Jim Rogers said if he could turn back time 20 years ago, he would have moved to China.
Oh, yes. So Asia is the place. You need to stay in ASEAN, you need to stay in Asia in order to make money and in order to grow in this part of the world.
And more onto the micro aspect now. What specifically can one do, not only to preserve wealth, but also to grow it in a time where, we are not very sure where to put our money?
I think the golden rule of investment is you have to be contrarian. And the number 2 rule is you have to gather market intelligence report. At IQI, we're quite focused and we are quite obsessed in sharing market intelligence report with our sophisticated investors. That's why our investors, they stay ahead of the mainstream media by 2 to 3 quarters. What we share with our clients, they get the same information from the mainstream media after 2 to 3 quarters. So gathering information, investing in tangible assets, that is the key, because sophisticated investors are more interested in having peace of mind, rather having sleepless night and losing your money. So most of the smart investors, they're taking position in real hard assets like real estate, like gold, silver, oil and gas stocks, arts, agriculture. So these are some of the real assets, tangible assets that can give peace of mind to smart investors. Otherwise, people can talk fancy and they can talk about derivatives and bonds and equities, and they can lose money and they can have sleepless nights.
And yesterday, Jack Ma mentioned, he talked about digital free trade zone. He mentioned this in passing. Have you picked up on this?
Absolutely, I think that's a great initiative. And Jack Ma coming to Malaysia is a very positive signal, not only for Malaysia but also to global investors. Because when Saudis are coming over here, when the Chinese are coming over here, when a caliber and a stature of Jack Ma is coming over here, that's a clear signal to the market that they want to focus. And digital marketing, digital technology is the future. So if you are in technology, you will make a lot of money. If you're not in technology, I'm afraid, people won't be making enough money. So digital, everything is focused on technology. So technology will actually spur growth for the economies in the next 5 to 10 years.
We look at fintech, our central bank, our governor, he's really keen on fintech. Will fintech disrupt the banking institutions?
I think fintech is a great technology. 40% of the global revenues will be coming from fintech in the next 5 years. So banks, they need to adopt fintech. If they don't adopt, banks will stay irrelevant. So I think fintech is an excellent technology, and most of the banks are moving into fintech, and they want to adopt it as soon as possible before they are left out and they are on the losing side.
What is your view on our Malaysian economy for the next 12 months, 36 months?
I think, as I said, at IQI, we already made a statement. Malaysia's GDP will remain between 4.3 and 4.7 for the next 3 to 5 years.
And what will be driving the GDP? Mainly the mega infrastructure projects?
Infrastructure, consumer confidence, strong aggregate demand, and educated labor force, that are the key to Malaysia's growth story.
And lastly, before we go, what's your advice, for young Malaysians? Any advice in what we should be focusing on to grow for the next, 10, 20 years?
For young Malaysians, I would say they should get solid education. They should focus on technology, enhance their skill set all the time. They cannot live in their past laurels or accolades. They need to upgrade their skill set and align themselves, according to the market situation. Whatever the market offers to them, they should align themselves accordingly. And solid education is the key.
All right. Thank you so much for joining us, Shan. We are so delighted to have you here. And there you go, guys. Thank you for joining us on StarPropertyTV again. I'm Jonathan Roberts. See you next time.